quite a fun time, isn't it? So yes, we're gonna do a recap on what is happening in the cryptocurrency space. Today is the 19th of April. The weekend we have a gigantic dip. It was one of those days where crypto fell by quite a bit, and it did hurt. It did hurt. I mean, so what was happening was on Sunday I was actually out, but during lunch I was checking on cryptocurrency prices, and I saw everything was like minus 10%. Right, it was like just one of those flash crashes that just happens almost instantaneously, and then everything is down. And it's one of those times when like I don't want to check up my portfolio, but I did. I opened up Ethereum wallet, which is what I used to spectate my altcoins. And you know how like, it loads and then like it shows your previous balance that is saved, and then it just loads the new balance. So I'm just like sitting there waiting. All right, it's loading my new balance. Bam, and you just see the numbers drop. Like, oh man, I just crashed like 8 cars right now. Uh, it's one of those days. It's one of those days. It's not pleasant. It's relatively unpleasant. But obviously, we know that today, coming to today, we have a very, very sharp rise in the prices of Bitcoin. We're going to today, what we're going to do in this episode is we're going to do a post-crash analysis of like why this happened, the real reasons, and then the fake reasons about why it happened. And it's going to be a lot of fun. It's going to be a lot of fun to recap on everything. I think the key here, the take home for everyone here, is that during crashes like this, everyone is trying to look for a reason. Everyone is trying to find that exact reason of why it happened. And unfortunately, what happens, right, is that there's a few fake things circulating. So yesterday, well, not really fake, but it's like it's partially true, but also taken to the most extreme variant of this. So the two things that really did happen that struck out yesterday was one was that Bitcoin mining hash rate dropped due to a Chinese coal mine explosion, and this cascaded into people calling, Bitcoin is a China coin, is a CCP coin, or I don't know, like, please just stop talking. Right? It's one of those things where people accuse of being centralized, miners have everything, it's gonna be shut down by CCP. This happens all the time. The second thing that I saw was quite interesting. I'll put it up here. It was being circulated around Twitter a lot. I'm not gonna single out QCP out here, but anyways, QCP Capital broadcasted U.S. Treasury to charge several financial institutions for money laundering using cryptos. Securities lawyers familiar with the Yellen Task Force plan said. Well, okay, right. We know that a lot of exchanges are in trouble. So, and I completely do not question that there will be some exchanges, crypto exchanges, that are charged with AML compliance issues. That's bound to happen at some point, right? Because we're still in a very new industry, and getting that compliance between traditional financial institutions and crypto financial institutions is hard. But yet again, this is something that can happen. This something like this could be released at any time. It's not really news, right? But what happens is that this kind of material tends to surface during crashes, so people can latch onto a reason why crypto crashed. But anyways, that's pretty much what I saw yesterday, and I'm like, this doesn't feel like an organic, real bad news phase. It just feels like what kind of really happened here, which was a massive cascade of liquidations. So that's kind of what we saw with perpetuals, futures. Let me just throw that out there. So anyways, let's do the proper analysis in this channel. We'll do in today's episode. We're going to catch up also on the news, and we're going to catch up on some comedy. Just like the number of people freaking out about crypto is insane. And we'll catch up, and we'll discuss about this, and we'll relay some stuff from 2017 as well, because 2017 was a very good experience for me for that ride, to understand the cycles and to understand how fear really overtakes the market at certain points, especially when people are greedy. Anyways, let's do that today. Let's get ready. Let's show the intro. And by the way, guys, if you guys are here, smash up those likes. It really does help the channel grow. I think recently we've been doing a super good job at that, and being really appreciative. We've been growing, spreading the good news, spreading or good analysis as well, and that's been super helpful. So guys, if you can hit those likes, I really appreciate it. We got like 300 people up here and growing, so smash up those likes. Let's get the stream started, and let's go. And by the way, make sure you're subscribed as well this week. Definitely some good streams coming up, so yeah, make sure you're there. So let's get started. All right. Let's just take a very quick look at the market. So yes, we are below $60,000 for the price of the Bitcoins. The Bitcoin. So yeah, we're dropping 3.2%. It's not too bad. 7-day we dropped 5%. So we did kind of take we did take a hit yesterday, a few days, and dropping below $60,000 is quite a big psychological hit too. So we were at 64 at its peak on Wednesday. This is right before the Coinbase listing, and then as the kind of Coinbase disappointed a lot of people who were very much hyping it, then of course we got the major hit on Sunday here. It just took bam, 2 hits in a row that took Bitcoin below $60,000. But the good news, of course, is that once we reached the bottom, it bottomed out at around $53,000, and we're climbing up quite quickly. Similar story with Ethereum. Ethereum dropped to almost below 2,000, depending on which exchange you were at. So at its bottom, it was at $2,058. But on some exchanges, say the one that Larry was looking at, Larry Sarmak here, he was looking, it went down to sub 900 depending on which futures platform he was looking at per protocol. So yeah, it could have gotten pretty rough, especially if you're trading on leverage. The take on that was that the leverage exchanges got hit very hard. Binance exchange went down for a few seconds. I saw this one. There was a person complaining about this. So Mr. Whale was talking to someone who got liquidated on Binance today after using low leverage. He said the exchanges disabled trades right before it dumped, so he couldn't log in and close his positions. He got liquidated and lost a whopping $730,000. Ouch. So this happened very close to the dump as it happens, and we've seen that before, right? This is not the first time. It happens on BitMEX, it happens on Binance, it happens on FTX. I'm not trying to play favorites here, but what happens is that during these big movements, there's a combination of a lot of people logging back onto exchanges trying to get rid or buy the dip. And then what happens is that these exchanges also get hit by hackers too. So people who very possibly could be manipulating the market to try to drive prices lower, they could also be attacking these exchanges using bots, right? So they'll be swarming these exchanges with requests, and then Binance just can't handle and log in. And this is where leverage positions are quite dangerous. And this is exactly what we saw. So during the time of the big crash, and why these crashes happen to be so big, like especially these giant red candles down, is because of liquidations. So what happens is that we saw on Friday, especially if you guys check out the Friday stream, we're talking about funding rates and how there were just too many long positions, right? That was what's happening last week, and that this led to a situation where if there's too many long positions, too many people believing that the market's going to go up, what happens is that if the market does go down, then right? Then it's like not great. So let me just take a look for you guys on the stream on Friday, and I'll show you what we're talking about. Let's see, Friday stream. Let me see if I can
today
is
find
absolutely
the funding rates discussion
insane.
that we
It
talked
is
about.
Friday over here in Hong Kong.
The just now here.
Leading effect area where, and because so just take a look at this funding rate, right? So this is the funding rate on a Friday. You can see everything was super positive. This means a lot of people were stacking up long positions. And then if you look at it today, on the other hand, you can definitely see there's a huge difference. In fact, there's a sign reversal. All right, look at that. So Binance is at 0.01% for funding rate. And then on Friday, this is during the video, right, we saw it's at 1%. So it's 10 times higher, right? This means that there was on Friday was a substantial number of traders longing Bitcoin, right? And you see even more crazily still, like BNB was like 0.3%, right? And then ADA was like almost 0.3% of Huobi as well. But if you look at it today, right, you see like negative funding rates, like a full sign change. This is where traders are bearish. There are more shorts than longs. So people are thinking it might even go down at this current point versus up. So you can just see there's a complete wipeout there, right? This is the evidence of that wipeout. The traders who were holding long positions, because of that sudden drop, they could no longer hold it. A lot of them just got liquidated flat out. And the problem with these liquidations is that there's no such, like, people think, oh, if you're in the traditional mindset, right? You think, oh, a margin call, the bank calls you or the exchange calls you, yo, your position's going to be liquidated if you don't put in more money. The market's moving against you right now. Put in more money, or else we'll close your position, right? But no, this is crypto. It happens in a split second. The the liquidation engine's on 24H, right? It's liquidating nonstop. It's like a it's like a factory down there. So yeah, so that was what really drove down the negative side. So it was a combination of factors. First of all, it was the market moving down because Coinbase didn't rally very strongly on market listing. In fact, Coinbase fell below expectations, right? If you guys remember, we're constantly looking at Coinbase as being the super positive news, but unfortunately, the super positive news also dumped quite a substantial amount as well. So traders were expecting Coinbase to list at $623, right? This is right before the listing on NASDAQ. This was being traded on FTX. So this was a predictor of what the traders felt like the Coinbase listing was going to be. People expected a Coinbase listing to be super positive to crypto and for it to go super well. But unfortunately, like the moment the market listed, like there was just huge dumps on Coinbase right now at 329. I still say that this is higher than expectations. It's higher than the 250, but a lot of traders were disappointed. People who expected 600, they were mega disappointed, right? This led to Bitcoin sells. All right, so this is where the cascading effect comes in. Right, all right, here you go. So you can see that there was a slide, right, towards the end of Friday, towards Saturday, there was slide. The market was sliding down, dropping, and at the moment it hit around $59,000. This is where the support is meant to be. Right? We drew this line. The previous resistance becomes the support. This is where the support is meant to be. But the support didn't come. So what happened here was a lot of traders who either had a stop loss at $59,000 or they were over leveraged and they would be liquidated at $59,000. This is when the cascade happens, right? Boom. The moment it dropped below here, like it was a one straight arrow down. Right, huge straight arrow, boom, bam. This is where all those leverage longs, they get liquidated, they get cleaned out. People who felt Bitcoin was going to 77K, 70K, 80K, they felt it was going much higher than that, but because they're on leverage positions, they get completely cleaned out here. This is one of the risks of leverage trading during times like this. Sometimes the market does move the other way, right? And this is why I don't take home those leverage positions. Although, of course, you did see I was quite euphoric on Friday. You definitely saw that. And I closed my Doge long positions because last week I was rejoicing on that. I took leverage tokens on Doge Bull. And I also use that to buy some other stuff like Litecoin, Bull, etc. Those didn't work out so well. But the good thing about Bull tokens is that they don't get liquidated. They can go to, I guess they can go to zero, but your account doesn't get liquidated. I think that's the difference. But anyways, so people's accounts got liquidated. This cascade caused a cascading dip, and then this is at the same time like all this news about, oh my god, regulations are coming yet again. This like. And then you have the miner one. Miners, it's gonna. Was it 30%? There was a mine blow up. Wow, there's a lot of fake box minings here. But yeah, so we saw what was this? Was a retweet? That's not a really good thing to search. Is it? Huh. My Twitter's a mess. Huh, I didn't post it. Okay. Anyways, I saw it earlier, but anyways, there was this like discussion about Bitcoin being mined. Oh, this one's scary. It's a scary discussion that China holds 45% of BTC hash rate. Oh my god, it's CCP. It's running everything. Oh my god, like look. This always happens because people don't understand mining. And because people don't understand mining, miners actually make the situation worse because they actually want more privacy. So the more fake news they spread, the better. So during interviews, they will perpetuate these fake news. First and foremost, all right, let's get this very clear, is that miners are very distributed around the world. Yes, there's a lot of miners from China because they actually believe in Bitcoin, and they'll never go out and tell you the reasons why they mine, because obviously, just because of the whole news area side. Like the transparency level is super, super low. But miners will always be business people. They'll always mine where the electricity is cheapest, and they will not stop mining. Right? We've seen like this we've seen like 8 phases where, oh my God, China's gonna shut down mining all again. And then 3 years later, you're like, oh, why is China still mining? Like people, just understand. This always circulates on the news. Whenever mining FUD circulates, when it's a time to buy. It's become to that point where if I feel like there's certain groups of people just perpetuating these fake, China owns everything myths, and then anyone who's like, they don't understand, they'll look at evidence, right? Some weird a few charts about Bitcoin pools. We know that pools don't represent the entire spectrum. Pools are just a collection of miners. Anyways, people look at this and then they get super confused. They get super lost. They think that, oh, Bitcoin's centralized. It's being shut down by Chinese government or some weird FUD like that. And they believe it, and then they start selling. And this is why, during these times, people freak out, right? But anyways, yeah. So when I saw this, I was like, you know what? And when I saw these two things, I was like, you know what? Like this dump needed to happen, but those are not the reasons why. Right? This is like the after effect, people piling in the negative news so they can buy cheaper. Like there's intentional people who do this, right? People who intentionally try to cause more fear when people are already afraid, when they're already looking for reasons. That's when the fear hits. People start believing all this stuff. Like, yeah. So anyways, Crypto Gardener says, can you explain why lower hash rate affects the price? All right. So let's go for a little bit. So hash rates did drop. Okay, let's see Bitcoin hash rates. So it's not a direct result. A lot of people misunderstand hash rate. So let's take a look at this question. And I guess there were a few people who were quite concerned about this. So let me explain to you a little bit about mining hash rates and everything. So let me just go search Dovi's comment. So Dovi was the one who first reported this. All right. So all right. All right, let's see. Give me a second. I'm just trying to find the first quote about this. All right. So there was a Xinjiang blackout, right? So Xinjiang is facing a major blackout due to a coal mine explosion. Bitcoin hash rate drops almost 30% instantly. LOL. So this was kind of what started. This came on April the 16th, and then this got really blown out to become like, Bitcoin is a China coin and all that stuff, right? So first and foremost, yes, Bitcoin hash rate did drop. So there was a drop from around 72 million hashes to 153 million hashes rate, right? And what we're going to see, all right, and we're going to see this very closely, is that hash rate is going to drastically increase after this. So hash rate is a combination of how many miners are turned on, right? So it's an aggregate. The more people are mining, the more miners machines that are switched on, all right, the more ASICs that are switched on, the more hash rate we get. If there's a blackout, what usually happens is that because people didn't expect the blackout, it was a coal mine explosion, right? So the machines will be turned off because, well, their power is cut. In which case, because these machines are extremely profitable, very likely what miners are going to do are either going to move these machines or trying to restore power back as quickly as possible, right? This is just logical. Now, mining hash rate has nothing to do with the prices. The prices really have to do with people's perception of mining hash rate. So if your hash rate drops 20-30%, what happens is that the Bitcoin network, typically speaking, will readjust its difficulty. So during the next difficulty epoch, if the hash rate is really lower, Bitcoin has a mechanism to correct that. So this is why I say in terms of the long term, in terms of the actual fundamentals here, hash rate does not matter at all. A sudden spike increase in hash rate or a sudden drop in hash rate does not affect the Bitcoin network over the period. So during the next difficulty epoch, if Bitcoin notices the network has a protocol, it's self-correcting, it notices that either the hash rate is lower or it's higher, it will readjust the difficulty parameter such that the number of blocks being produced is always 1 every 10 minutes, or on average 1 every 10 minutes. What happens is that during a sudden drop, an unexpected drop, what happens is that the block rate time or average block time will increase. That is because the difficulty may be too high for the hash rate. All right, so the chances of finding a block will be a little bit slower. But yet again, like I said, this difficulty readjust does not affect the network operation at all. But it does affect people's perception of it. So here, because of that blackout, people are now given a bit more information that, oh, there's a lot of China miners in China. And in fact, if you look at the drop, it's not even that big. It's a little bit more than 10%. And people are like freaking out. It's like a 50, 30% drop or whatnot. Look, the perception is always worse. A lot of times when people start circulating this like mining FUD news, people don't understand what this mining thing is. They'll make up stories. They don't really understand mining. They'll just like make up these stories like, oh, Bitcoin network's going to end, or it's like, I don't know, it's based on a CCP or some stupid stuff. I cannot tell you guys how frustrated I am at the lack of understanding of what happens here. So anyways, regardless, that's why there seems to be a correlation. But let me tell you guys that there is absolutely no correlation with how the network operates and mining hash rate. The network already self-corrects for changes in hash rate. So hash rate has always gone up, yes. Traditionally, hash rate has gone up. If you look at the hash rate graph, Bitcoin has gone up, hash rate has gone up. That's true. And a lot of times hash rate is always a response to the price of Bitcoin too. So what happens is that once the Bitcoin prices go up, miners turn on more and more ASICs, especially the older ones. It's like you're turning on your old PlayStation 3 after a long time. Everyone likes to play PlayStation games now. So, well, if you have a PlayStation 3 lying around, and right now it's PlayStation 5, right? That's the latest model. You're going to say, oh, maybe some people want to play PlayStation 3 games. Maybe I should turn this on and, sell some games or something like that. Like this is exactly that situation. So miners are more reactionary to the price than they dictate the price, if you know what I mean. So that's the truth behind mining. So I've seen people with like old miners from 2017, they switched their machines on. Like I know there's a Litecoin miner, there's a Dogecoin miner all the way back in the day. And yeah, sometimes they switch it on. If those prices are really, really high right now, then it becomes more profitable to mine. So in that case, more people will start mining, the hash rate goes up. So yet again, reactionary. Doorstop miners became profitable this month. So a lot of people don't understand it. There's a lot of FUD. There's a lot of miscommunication here. There's a lot of people like saying, oh, people are dumping miners by the pound, selling miners by the pound for scrap metal or something like that. And that also happens too, because if miners get obsolete, if the technology improves drastically, that also happens. So yet again, just be aware. There's a lot of nuances to this here. James B says, what's going on with NEO? So yet again, the altcoins are going a little bit crazy right now, especially with the Dogecoin. With Dogecoin leading this rally right now, we have a lot of resurrection of older coins. So you see Bitcoin Cash moving up. VeChain is also moving up quite aggressively today as well. Chainlink, Uniswap is also up. Today is just like a crazy day. NEO is fantastic. Look at that. NEO is 50% up 50%. So this is in combination of two factors. If you look at the streams over last week, people are kind of predicting what kind of alt would move up, and a lot of people are talking about these alts that got a lot of attention back in 2017. So I wouldn't be surprised if Doge or Nano, Neo, Ontology maybe, these coins would kind of resurrect from the grave, right? We have IOTA. I think people haven't talked about IOTA for a while. So it's a situation where the market moves in response to what they've seen, what the other trends are. And because Doge really set the precedence of this coin that hasn't really been developed a lot, it's mostly based on memes. There's a substantial number of issues with ownership of big wallet ownership, like whale ownership, but people don't really care, right? People don't care about these factors that make it risky. People just say, oh, look, it's a meme, right? This DOGE is proof that mainstream doesn't care about one wallet holding 23% of the supply, no development in the last 2 years. Doesn't matter. Wolf. Who cares? Wolf. Like, go DOGE, right? So that's kind of the story that we're in right now, where we're in a phase where people don't care as much about the fundamentals, but people care a lot more about the marketing, the narrative, the story. And that's the kind of case. So yet again, Neo resurrection. With Neo, there's another part of the story, which is that there's a new version of Neo coming up. So they're ramping up the marketing play, which is yet again, it's why it's performing a little bit better than everything else out here than a pure resurrection pump. It's playing a little bit better than everything there. So yeah, those are my thoughts on everything happening there. Let's see the altcoin index. Oh, also I saved something here for you guys. This chart layout is modified. All right, so this is a chart all the way back from 2017. Right, so this is 2017. This is in September. Bitcoin shot up to 4,800. It was spectacular, and then it had a sudden drastic dump. So this is almost like a mirror reflection of what's happening right now. Right, so we're kind of almost repeating that situation where we saw, so on here on the 9th of September 2017, you saw the market weakening out and then a very sudden drop. And this drop, like if you think about it, right, if you think about from 4,300 to 3,200, sure, it's a $1,000 drop. But if you think about it in terms of percentages, right? If you think of this as like 43K dropping down to 32K, that would be a more relevant example, right? Because prices are up 10 times right now. But yeah, so the market took a major dump, right? If today crypto prices drop from like 62K to say 52 or 42, same thing, right? So anyway, so this is exactly what happened during the times of September, and this happened quite a lot. If you actually zoom out a little bit, you can see that there were these major dumps that happened in July as well. There's another major dump that happened in June, and this is very kind of very true. It's just a set pattern with crypto, especially because of the number of leverage positions in crypto. And then we had the giant wave up, right? Then we had the giant wave up and then the crash down. And the crash that took the entire market with it, right? If you actually look at it like this, you can kind of see what happened. So just like boom, 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 and giant, the peak, and then it crashed down. So obviously timing this is very hard. But what I do have to say is that these kind of crashes happen a lot. And the last month or so has not been very turbulent in crypto. Number go up almost every single day. So I kind of feel like in this part of the wave, a few things, right? First of all, the crash on Sunday is relatively small and the support is quite strong. So yes, we did crash below 59K, but people bought that up almost immediately. I think there was almost this expectation that on Monday, once markets opens up, we'll have either more of a dump, but it's very quite clear right now that the trend reversal is already set in place and that there's a lot of people buying the dip. So I feel like this time the market is returning stronger. This is why I'm not too concerned about prices at this current point. I feel like personally, not financial advice, of course, but I personally think that we're still in that FOMO phase. I've shown you guys a chart, the rainbow chart right now, and yeah, we're still in the FOMO intensifies phase. I feel like we're still in that phase, and for altcoin season, I still think we're just getting there. It's at the peak of altcoin season, but I think this year, with the way things are going, we're going to break the charts yet again. I think we're going to go break the charts like in 2017. I feel like there's just so much attention onto crypto right now that this type of like fever is almost inevitable at this current point. So anyways, I'm not too concerned on both these fronts at this current moment. Anyways, I think that's pretty much for me rambling about what's happening on crypto. Uh, big dumps on Doge. Need a poop bag, but it's kind of funny. I mean, Doge is recovering quite well too. I wouldn't underestimate Doge. So I'll tell you a little bit about my position. So I've closed out my position on Doge on Friday. I unfortunately did not re-enter. There was a situation where I probably should have re-entered if I'm like a avid trader, but this week I was not trading very aggressively. Let me just show you Doge. So Doge. So my position that I took on Doge was actually with Doge Bull. That was the big position that did super well for me last week, right? So my entry position was around 3,000, 4,000 for Doge Bull. So this is a 3x leverage token for Doge, and then it just took off, right? I did sell, so I sold on the way up. So I did sell some at around 80,000. So just here, and then I sold almost everything at around 180,000. So that was a pretty big profit for me. I think it was around 200K, maybe a little bit more when I cashed out everything at the end. And then I didn't manage to buy. So when Doge crashed down, I didn't manage to buy. So if I bought here, obviously hindsight speaking, 2020 hindsight, that would have been a great trade. But it was a situation where I felt like I'm going to wait maybe a few days to see how this calms down a little bit, to see what happens. But yeah, right now, Doge is rallying yet again. It's kind of crazy. It's a total insanity. So anyway, so that's kind of the current take on that. I did re-enter a few bull positions, like a few more bull tokens after selling Doge, but those did moderately well. I think because it got caught up in the crash that happened on Sunday. The positions weren't liquidated, but they didn't perform super well. It's kind of thing. So Ronnie races literally 15 minutes ago. Michael, I don't do trade on leverage. Good for you, man. So there's a correction for that. So last week I did try the bull tokens. I'm not trading on account leverage. It doesn't make any sense for me, but I did have exposure for Doge for leverage tokens. The reasoning behind leverage tokens is that these coins, it's leverage tokens for me are for coins I don't really want to hodl long term for. So something like Doge, I will be okay with entering a leverage position. Chainlink a little bit, maybe a lot less. Bitcoin SV, Bitcoin Cash for sure. Like if I'm entering, I'm gonna enter Bitcoin, enter in a leverage position. Tron maybe. So these are the coins. The reasoning here is why, right? If you want to have Tron exposure and you buy Tron, right, there's a risk that it'll drop 90, 95%. Right, and that happened with Icon all the way back, and I think that happened with Tron as well all the way back in 2017, which is when the bubble burst, you could lose almost everything, right? If you lose 95%, if it goes down 95%, that's like losing your entire position. So in that case, if you're willing to lose your entire position anyways, then why not get the bull token? Because for bull token, if it goes down by 33%, you lose everything, right? But at the same time, if it goes up, you have like 3x upside too, right? So I was thinking if you're gonna gamble anyways, why not YOLO? I guess that's my philosophy. But anyways, I might change that. So anyways, that's my current philosophy. That's why I did that for Doge. It worked out, but I don't think it will always work out here. So anyways, it's still an experiment for me. I'm not a heavy leverage trader. By all means, it's one of those things that I have a lot of research into, but at the same time, I almost never dabble into leverage unless I have a very good position of a good trade that I want to enter. If that makes sense. That makes sense. But I will never take a account-based leverage. So that's one of the risky parts of FTX, which is that when you take on a leverage position, you can the power of FTX means you can leverage your entire account, right? So I've seen a few people, and Willy Woo does this properly. So what he does is say he deposits 1 Bitcoin into his FTX account, and then he uses that 1 Bitcoin as account leverage on a 0.3 leverage or 0.5 leverage to buy more Bitcoin. So this kind of increases his Bitcoin exposure. But at the same time, if Bitcoin drops in value, then he can risk up losing his 1 original Bitcoin he deposited there, right? That's kind of how how risky leverage trading is. So some people, what they do is they choose, like say they deposit 1 Bitcoin on FTX and they do a 20x leverage, which means that if Bitcoin goes down by 5%, like a leverage long on Bitcoin, if Bitcoin goes down by 5%, they'll lose the entire Bitcoin. Or if it goes up by 5%, they'll get another Bitcoin, right? So, risk reward. So a lot of more experienced traders, they'll never take a 20x leverage. They'll maybe take a 1x leverage or a 0.5x leverage. That's sometimes how it goes. So they're very, very protected, and they deposit in Bitcoin and then they leverage up another long position in Bitcoin just to increase their holdings, if you understand what that means. Sorry, not the one. It's if you understand their strategy. So I don't think leverage is necessarily bad. I just think that it needs to be controlled, and there's very different ways of doing it. Okay. All right. So I think that's around it. I think there are a few other topics I wanted to talk about. So let's see. This was quite funny. This is quite funny. My anti-coin neighbor gleefully asked me how I was going to do now that I lost my life savings to last night's crash. So I thought this story was really interesting. So I got on okay with my neighbor, and we kept talking about investing in retirement. At times, he's a decade older. He's a good neighbor, but definitely has a chip on his shoulder that I can afford to live next to him at my age with where home prices have gotten here. I don't know who he's getting his info from, but he's initially rabidly anti-crypto, thinks it's all some Ponzi scheme. We politely usually argued about crypto versus stocks. He tells me at the time that I'm risking my house and kids' future with coins. Mowing the lawn this morning, I bumped into him, and before the mowers were even off, he gleefully asked me how much financial trouble I'm in now that crypto has crashed after last night. I normally think comparing wallets is crass, but just the attitude on him, I couldn't help it. I pulled out my phone, opened my crypto portfolio tracking app. I started with showing him the last 24-hour view. He laughed. Then I showed him the view for the last month and then last year. He was not happy. Insisted that I should just show you that you could lose everything at any moment. And well, at this rate, I will be living next to him for much longer. LOL. So yeah, OP is gonna buy a new house very soon. But it's one of those situations, right, where crypto did take off. And I think there's a lot of people salty about this. I still meet people who are really salty about this all the time, where they're stuck in the mindset. It's a bubble, right? Especially if you believed in the negative news painted by crypto in 2012. And I was there. I was there in 2012, right? When, everyone said this is a bubble, this is a crash. No one on media would say, oh, Bitcoin, there's some value here. Mainstream media just bashed it like crazy. And I think most people, right, believe that. Most boomers think that. I don't want to be ageist right here, but yeah. But it worked out, right? And that's something that a lot of people cannot compute, that they are wrong. But anyways, I can see this guy, shaking his hands and be like, ha ha ha. I don't know. I found that funny. Anyways, all right. This is the other thing that was kind of funny. I just want to bring back some old memory. There was a hoax that Vitalik died in 2017. I want to bring this up because this is the type of fear and FUD news we can expect in the coming months. So we already seen, today I pointed out this whole mining thing. Oh my God, mining is Bitcoin centralized by the Chinese CCP or something. And then we saw the Twitter, the message about, oh my God, Yellen task force is gonna, kick some exchanges in the butt. This is gonna be more of that, and it's gonna be more extreme. So in 2017 we had this hoax that Vitalik died. It's Vitalik died in a fatal car crash. It circulated for 6 hours before Vitalik himself had to come up and say, look guys, I'm still alive, right? Here's today's block number and block hash. I'm still here. Here's a photo of me. Anyways, this stuff gets really out of control. They probably time for when Vitalik sleeps. So then when Vitalik sleeps, they have 6 hours to spread all this fear that Vitalik is dead before he comes and disproves them. But during that 6 hours, the markets can completely tank, right? So anyways, I just found that funny, just a good reminder. I also have Disbalancer here. So Disbalancer launched last week. Why I kind of brought this up is because you guys saw that exchanges were going down. There was DDoS attacks on exchanges trying to force the market out. This is a product that directly protects exchanges from that. So this is the Anti-DDoS. It's the response. It's a network that protects other networks from going down. And this is something that will be quite vital in the future. I see that this is something that we have a problem with this in crypto where all of a sudden, prices crash, people can't log on to the exchanges because of the amount of service attacks. This is the shield for it. So right now, I did tell you guys that this is a cybersecurity feature. This is something that I did invest in. And the reason why I invested in it is because it's so critical for future internet infrastructure. So if you guys want to find out more, it's DDoS. The good thing is it didn't really drastically pump. The prices are still reasonable, and I feel like it's one of those positions where fully diluted, it's like $2 million. So yet again, I felt like this is a good time to talk about, like, once you see these DDoS things happen on these exchanges, then you're like, okay, people start to understand why they need this more. So anyways, that's my 2 cents on everything here. And I think that's pretty much it for today's episode. Let's do 5 minutes of Q&A and see how see how it goes. All right. Mr. Burns says, I am 57. I am crypto maxi. Absolutely. That's why I don't want to be crypto ageist. I don't want to separate populations by age. Like, there's different people, and I'm completely super happy that this that crypto has, I think like now we can definitely see more and more people getting into it. I know Bernard Macarius, he's like super into it as well. And yeah, it's great. I think the difference is really not about age, but about how you, like, if people felt Bitcoin was a bubble, it's about how people deal with being wrong. Do they really kind of wake up, or do they have this cognitive dissonance where they only see the negative and their mind cannot process the positive, right? I think that's kind of the situation with that neighbor, right? Of this, he only sees the negative, so he always thinks that this is a bubble because that's the only time he can know that he's right. And every other time that it's going up, like, he's just like zoning out. Like, the mind cannot compress. So, anyways, that's it. Nev's Junk says, any yield farms to recommend? So yeah, yield farming is going down a little bit, so the rates are not as good. I'm still stuck in my quite a few ones. There's a few aggressive ones that's on Box Nation. So what I'll do on this Friday, stay tuned for this Friday, is we're gonna open up another Telegram channel for us to share all these degenerate mining opportunities. But right now, like, I calculated this weekend, a little bit upsetting is that a lot of the yields that were, say, 120% APY, they've gone down to around 78. That's the number I calculated for Wing, at the very least, at least for my current positions, is around 70% APY on stablecoins. It's not bad, but I think I'm like a little bit spoiled by the 120, 130% exciting times for yield farming, but there's still a lot. It's just, yeah, the returns are not as high as the few weeks ago. So, that's too bad, but that's life. Anyways, Time DJ says, is it too late to get into VET? So VET's been kind of crazy. VET I've been holding for such a long time, and we're in amidst a very strong VET rally right now. So it is going hockey stick up right now. If you zoom out for 1 year, this is where you have to be extremely careful. Like, obviously, good times to enter are here. For me personally, I entered like here, like before this. This is before it changed from. I entered at Venn times, right? So this is pre-VET. So my position entry was around, if you think about it, 0.02. So right now it's 0.26, right? So it's 10x plus from my entry positions after an entire bull cycle. So I would say at this current point, it's a little bit crazy, and like, that's realistically speaking, right? It's a misses pump, so you have to be extremely cautious. I'm holding it. Obviously, I'm cheering for it. I want to say the best things about it, but with this market the way it goes, if it goes parabolic, you have to be more careful than not. That being said, I'm still holding on to it. I just don't see any point in selling it at this current point. Like, in terms of market understanding, most people still don't understand what Fed is. So I don't know. That's my 2 cents. Review King is everything is pumping. Seriously, today is one of those days. Yep, like we're on here right now. Past 24 hours, everything is going up, right? We're at the main pump time. Even Solana, Quantum, the Solana narrative's coming in. Anyways, yeah, it's time to celebrate a bit. So if you guys held, if you guys did good this weekend, tell me. I definitely think everything's gonna. I think we're still very early. That's the crazy part. I can still think like at least for this entire market, I'm super optimistic still. Like I feel like the public just got a taste of this, and a few of my friends that are in finance, they're starting to contact me about crypto. So that's usually a good sign, but it's a sign that we're closing up on the top. Once every person asks me about crypto, like every one of my high school friends or whatnot, that's when I have to be very careful. But we haven't really reached that stage yet. It's only the people who have been in, trading stocks or in GameStop GME for a while that they're contacting me about this, right? But I think we're still maybe a little bit away. And I just want to say the reason why I'm so into this right now is because if you remember towards the end of the bull cycle in 2017, everything went up crazy, right? Like we're starting to see a little bit of it, like everything going up 50% per day, but we saw this for like weeks on end in December of 2017, and that's the moment I'm waiting for, right? You're waiting for that explosive growth, and that's where all the major profits can be made. Obviously, it's the most risky, but that's where you have to really play it, a combination of safe and aggressive, I guess. That's where it is. So anyways, that's pretty much it for today. We got a compliment from Joseph Saylor. Says Michael is probably smarter than any financial advisors contacting him. It's kind of crazy because like you kind of feel like at first I thought the markets will all be based on fundamentals, but you kind of realize it's not, right? It's based on socials, and this year looking at social signals is very, very helpful. So anyways, that's my current take on it. I feel like we have not peaked social signals yet. We're starting to get there. So obviously if people who are afraid, like people who've been in here for a long time, taking 10-20% profits, I think it's absolutely cool. There's nothing wrong with that, but I'm personally waiting for the big wave, the massive one. So anyways, guys, thank you guys so much for coming in today. There's going to be a lot more discussion about altcoins coming up on, probably going to do a Wednesday episode. I think that makes the most sense for me just to update you guys on what's happening on the whole altcoin front. Everything is exploding this week. So I think today and yesterday was really the major shopping day, and the market reflects that, right? Today is, you guys definitely see a lot of shopping going on with those sprinkles of green everywhere. So anyways, we're going to do a few surprise live streams coming up. The main live stream scheduled is on Friday morning, and we have a lot more videos releasing this week as well. So stay tuned, guys. Make sure you guys smash up those likes today. We have 500 people watching right now. So guys, let's get to at least 200 likes right now. Let's do that. Let's do that for me, guys. Do that for me. So Puya Chomeli says, I think right now it's more big caps than anything else. Maybe this time around, most money goes to proven projects. No. All right. Sorry to say that, but no. People take profits off big caps and plow them straight into the smaller ones. So the biggest gains will be in the smaller caps. That's just a given. Like especially if you have a cap let's say for example DDoS, right? It's like a $2 million cap. So if someone plows in like $500,000 into that, like that would have the most explosive growth. But of course, there's a lot more risk. So this time around, I don't think it's going to change. I don't think people's mentality changes at all. Like like obviously you think people would learn from their mistakes from last time where, small caps and alts went too crazy, but nah, I think people, the herd mentality is always the same. Her mentality is always the same. Sorry. Apologies for laughing at that, Puya. But I definitely think that this year, proven projects will go. The big funds will invest in them, but the people who made money off the big projects will just plow them into the smaller ones. That's just the way it is. But anyways, yeah, like or bot, like Elijah Kellen says, like or the box plan will haunt your dreams. So thank you guys. We're past 200 likes. Thank you guys so much for that. Crypto Garden says once gas fees goes down, then alts can really pump. And also a lot of stuff is happening on Binance Smart Chain, Avalanche. There's going to be Algorand, Cardano, got Occam Finance coming up there. That's pretty hot right now, doing DeFi layer on Cardano. So anyways, yeah, that's going to be, there's going to be a lot of crazy stuff. Anyways, guys, thank you guys so much for watching today. Really appreciate all the likes that you guys have been smashing. Been super awesome talking to you guys. Thank you guys so much for watching. I'll see you guys next stream. I'd like to take the time now to tell you a little bit about everything that's happening in the box mining ecosystem. First and foremost, if you guys like listening to all that's happening in crypto on the go, then I would highly recommend you checking out the Box Mining Bitcoin Out of the Box podcast. And the reason why it's called Bitcoin Out of the Box is because we have long interview segments very much exploring the detail of the newest and latest of what's going on in this whole cryptocurrency space. Whole idea of it is to bridge that gap between knowledge privileged institutional investors and the rest of us here in this space. Now, with the podcast, it's on everything. So it's on Apple Podcasts, it's on Google Podcasts, it's on Spotify. Just search it anywhere, Bitcoin Out of the Box. So just add that onto a playlist and let's just follow the new episodes when it's released. Next up, we also have the Box Mining newsletter. So this happens roughly bi-weekly. We give you an update of the latest that's going on in a very summarized, condensed format. So this is perfect for anyone that wants an overview of the market. Say, for example, what's happening with OKX, the biggest event, or maybe the little things like what's happening with different coins and overall the trend. So what I use the newsletter for personally myself is to understand what kind of phase we're in crypto, to kind of get in tune. So if you don't read crypto every day, the newsletter is perfect for you. Last but not least, in the link down below, if you're a Telegram user, we have the Box Mining announcements channel. So this is to announce to you basically what's the latest videos coming up, but also we have a daily update, a community-driven daily update to provide you an idea of the latest updates on a day. And a lot of people have been using that to get informed of the crazy amounts of trends that we see. And I have to give a big thank you for Claudio, our community member, for doing this. It's just been phenomenal. Definitely want to give you a shout out there, Claudio, as well for that. And taking us to the end of the live stream, so make sure, number one, you click like and subscribe on this video because it really does help this channel. And then, of course, check out the podcast. It's one of the best ways to know a little bit more, to extend that knowledge, especially in your spare time. And then, of course, check out the newsletter. If you're, if you want those updates and summaries and trends, newsletter is the place for you. And with that, guys, thank you so much for watching this video. I really hope you have a good one. See you in the next video.